Okay, welcome back, guys. In today's video, I've got so much information for you guys. I want to show you so many different metrics and hope all of these kind of help you towards your journey into the thing. And also watch to the end because I'm going to show you some fundamentals regarding Bitcoin and what's happening in the whole ecosystem of Bitcoin. And it will probably give you a rough idea of what to expect and what a lot of people are doing and why I'm always so persistent on holding BTC and not selling BTC. So it will kind of answer a few questions in one. Also, a long-time friend and a long-time subscriber who subscribed right in the beginning, he asked me a question yesterday. He called me up and he said, look, dude, I've seen your video. And on your videos, you constantly mention the Fibonacci 0.786. You constantly mention that. You constantly mention the Fibonacci 1618. What's the significance of all of this? Why do you keep on following those? What's the deal with Fibonacci? So today I'm going to try and answer that. And actually, I'm going to be giving you a little bit of my secret, my technique of buying at the perfect time. So it's not even mine. It's actually based on the Fibonacci retracement and extension levels. And there are books, and I'll link a few if you want. I'll put a few links down there. There are no affiliate links. Don't worry, you can go and buy it, or you can just search the words. But you can buy the books and have a read through yourself, and you'll understand more. So if I was to do this, it will be episodes and episodes of how the Fibonacci system works. And Fibonacci also integrates itself with the Elliott wave theory as well. So there are multiple theories all connected in one, but the Fibonacci just makes it a little bit more easier. And on a chart, it's actually simple to put on. You just put the highest, you find your swing high, swing low, put it there, and you've got the data. So what I want to do is quickly take you guys to all of those things and move through the charts and everything quite fast. So today, anyway, let's do the market. So on the market, we can see we're up 5.7%. Bitcoin's testing out the 51,000. It has to remain above. So remember, today, in the next, I think it's about 5.5, 6 hours, we have to close above the 51,000 in order for the new candle. So at midnight tonight, this is what we're expecting. Ethereum has taken a little bit of a dip. It was about 8% of the market cap earlier on today. But you know what? It doesn't matter. It's all good. Also, I'm going to be releasing another video. It's going to be titled The Battle of the Giants. So please make sure to watch that one when I do release it. So I'm doing a little bit more information on that. Once I've got everything ready, then I will release the video. It's going to be Battle of the Giants. And as usual, I'm not going to script it. I'm not going to do anything. I'm going to do it there and then. So it's recorded and it's sent out. If you guys want me to do it live, I could do it live for you and we can talk about it. That's not an issue. Let me know in the comments. Also, if you haven't subscribed or, consider subscribing, that would be really helpful. Share, like the video, and also I've had 2 new subscribers recently. Thank you very much for subscribing. Really appreciate that. It does help the channel grow. Okay, so we're going to go straight into the BTC, right? Straight away go into the BTC. In the BTC, as you can see, yesterday we did close above the previous date, which is really good. And then today we had this particular candle, which is, so day before yesterday candle, we saw the first time, okay, we went above this threshold, this particular support line. And then we confirmed it yesterday, right? So these are all on the daily, we confirmed it. And then today, our candle, we have better, it is a bigger candle, which is much better, but it hasn't confirmed yet. So we still have 5 hours and 57 minutes remaining for it to confirm. If it confirms above this line, then we know the next candle could potentially take us up again, right? Go back to our previous highs and test those levels. So far, everything is looking good. I'm not really that fussed about it. And I am going to come back to the 786 level and explain to you how it works. And also, just to kind of, before we get into that kind of information, you can see that I'm using my Fibonacci levels, but I'm using the total Fibonacci. So I'm using every single sequence there is. Give me a second. So I'm using every single sequence there is for me to do much more, how would I say this? So I'm doing it a little bit more in depth. So I'm looking at all the extension levels available for me to test it out and do my thing. But what I'm going to do from today onwards, I'm going to change all of these Fibonacci levels. And I'm going to apply the new modification that I've did. So I made my own custom Fibonacci for you guys, so you guys could see, and it will make it a lot more easier. You'll see very soon when I get that. So let's pop into Ethereum while we're on the subject. So again, on the Ethereum, As you can see, we've had, so yesterday we closed above, which is very good. So this is now, this is our kind of a support range. So we broke resistance. It was resistance. We broke the resistance. We went above. So it's good. And then the new candle is still got obviously 5 hours and 55 minutes left to close. As long as this candle closes above this candle, everything's good. If it closes below, then we could possibly see us going back into this channel. But then again, in this particular channel, as you know, that we've got the previous all-time high of 2018, which is a massive psychological support, right? So it doesn't have to even meet any of the points. It's just a psychological support range. We are not going to let it go down below this. However, if it does, then the green line comes into effect. And also my 0.786, right? So we're going to get to this, right? We're going to get to this. In fact, we'll get to this right now. How about this? So let's do this here. Right, so we've got a brand new chart. So what I've done, I've just opened up another clean chart on Tether USD, just to kind of show you guys what is happening in the market. So if I open up my Fibonacci tool and I draw, this is the new modified version. So I've deactivated all the unnecessary ones that are going to confuse you and just kept the simple parts there so you understand. So we take our Fibonacci tool and we say, okay, we're going to look for a market high to whatever, and you can do it from any range. So for us, let's do this particular range here currently, or we can go all the way back to the March dump that we had, right? So we have the March dump just here. We can keep it here as well. We can work around with this, right? So, but currently I think for this video, we're just going to keep it on a short term. We're going to say, okay, we're just going to keep it on the short term. We'll do the previous low of January 27. So January 27 low. So we'll keep the January 27 low. And then we have a look at the chart, right? So let's have a look at the chart. So what do you see in here is the question, right? So let me explain a few things here. Point 0 is the lowest point, right? Point 1 is the highest point. So we took swing low to swing high. Right, or you can say swing high to swing low, it doesn't matter. It depends if you're doing a retracement or if you're doing an extension, right? So here, we're just going to use a tool and we're going to show you what we are seeing. So in this, I've made this, so this is kind of custom where I've put my custom data points as well. What I am looking for, right? So the 1 signifies where the market top was. For me, I'm looking for retracement levels. So I'm saying, okay, if we are at 1, how far can we go? Now this 78.6, right, 0786 is actually 22%, right? And then if you look carefully up to here, 65 is 35%. Up to the 618 is actually 38.2%. Okay, this is the future me. 10 minutes after I made the video, I didn't clarify something, so I want to do this right now. So while I'm editing, I'm actually doing this, and I'm just going to do 1 or 2 cuts because I had like a phone call and this and that. So when I'm talking about the 22%, the 38%, the 50%, I'm talking about the Fibonacci percentage, not the market percentage. So you have to understand, I'm not talking about the market dumping 50%. I'm talking about the Fibonacci levels going down by 22%, 38%, 50%. So just to kind of correct myself, okay? So let's go back into the video and continue watching, right? And here we have 50% market correction, right? So on a daily candle, it is not unusual. So if we're climbing up and up and up, and we've been going like here, we've been going up and up and up and up, we should always expect, right, to go as high as our 1.618, which is the golden ratio, right? So we're always going to go that. So it doesn't matter where you do it here, you'll have your new golden ratio. And then we are going to expect a correction. So whenever we go up here, I will move this line, put it up here, and I will know exactly where my corrections are. Traditionally, the corrections will happen 22%, 38%, all right, or 50%. 50% can happen, but it's not as that common. Most common is about 38%. So look at, these are actually percentage marks, right? So when you look carefully, we can go up this much, 38% from 1, and we can come down 22, 35, 38. But traditionally in the stock markets, and I'll link some books down below as well, you can read about this as well. The Fibonacci, so the Fibonacci golden ratio is the 1618, which is a magical mathematical number. It's a very old number, but again, I'll put books, links to the books, and also I'm not affiliated with any of them. There's no affiliate link. You can read them, do whatever you want, buy, or just search the names if you want. So traditionally, basically, the 61.8 and the 0.65, right? That particular level is a very strong sentimental level where people will actually buy. So if you have a trend that is moving upwards, right? So you have we're currently in a bull market. So I'm using this for a bull market. We can also use it for a bear market. So in a traditional bull market, you know the trend is going up. So it's gone up to a certain level. You want to predict how far it could come. This particular area is known as the golden pocket. So if you have a buy order around this golden pocket area, it will move up. Now, I want to take you back into my old chart, and I'm going to modify a few things here, right? So first thing we're going to do, we're going to get rid of this, right? We're going to get rid of this. Put it down here. There you go. Let's get rid of this. And so we've got rid of the Fibonacci, right? And what we're going to do is we're going to put the brand new Fibonacci on this, and I want to show you what you see. So let's have a look. Hold on. So we have to go to the data point. 1 second. Okay, so what was this chart about? I'm doing it here. I'm not going to cut it or anything. I just want to show you. So you know that I'm looking at a macro level, right? On a complete macro level. And I'm like, okay, I want this chart to basically work in my favor, and we want to do it from the lowest point. So the lowest point we had was in March, just before the rally started. And if you look carefully, and I'm not even making this up, right? You can see carefully, I'm not making anything up. My box is here, and I've had a buy order at the 39,000, which, if you look carefully, is exactly in the golden pocket. You can see I've colored it, right? So it's exactly in the golden pocket, and that's what I've been looking for, right? So for me, if I was to enter the market, right, as you can see, this particular zone here is the perfect zone to buy. Now, obviously it didn't come. That's fine. If you look carefully, you can see that we did kind of, right? So on this particular candle, we did come down to the this particular level where it's just within this golden ratio pocket. So a lot of people would normally use the 50% and the 786 as the golden, but ultimately it's the center of it that is the perfect entry. So for me, I can blindly put a buy order here, knowing that the market's going to go up, right? So if I blindly put a buy order there, I know that ultimately it's going to go up. So that would have been a perfect buy. And that's why I said if it doesn't matter. However, you can see the bulls took complete control around the 22% to 25% mark, right? So they took the control and they pushed it back up. But then we also need to look at the bigger picture, right? So let's get back into this and let's have a look at the bigger picture. 1 second. So we're going to go into the bigger picture of all of this and say, right, what's the other scenario? So the other scenario is, if we go back here, then obviously we're going to be targeting for the golden ratio. And as you can see, just because I've modified the current highs, now my golden ratio is showing a $91,000 coin, right? When, I don't know, but these are kind of the things you have to understand. Is like, you have to look for opportunities and you know, patterns within the pattern to see it. So I'll leave this chart, this modified version of the Fibonacci for you guys to see. I mean, I can modify it even more, but I think this would really help you understand why these are perfect buy orders. Also, remember I told you I'm going to show you about this one as well. So let's take this chart. Let's again get rid of it, and let's use some good data on this to see if we can find the market low, right? So currently we can use the total or we can use this particular rally here. So let's use this rally here to see what we're doing. And again, I'm doing it right in front of you so you understand what I see when I'm doing these kind of things, right? So was it this? No, it wasn't this. Sorry, it was a longer term. Yes, it was the March. There we go, just put it down here, right? So there we are. So this is what I saw in the March levels when I was looking at it. And again, guys, you can see I'm not making this up, right? Look at the Fibonacci 0168. It's bang on that line. So, and we did touch it, right? And then this is when the bulls took it up. So this is what you have to understand. A lot of the times when I'm drawing these lines, there's a massive reason behind it. It's because I'm looking for this particular area where it's the perfect time to buy. Right, so it didn't really last that long. It went above and then we went on. So, okay, coming back to this, so as you can see, basically the 1309 would have been the perfect entry. So obviously I'll put it in the low. I'm not being as generous, but I'll put it on the low, and this is where this will take us, babe. So if you just, I mean, kind of observe this, and you'll understand why some of these lines and why some of these numbers are very significant to me. So we know that this, the 786 level is a 22% decrease, right? So it's a perfect time to buy, and these are the points you would scale in. So for me, if I was to start scaling into a project, right, or cryptocurrency, these are levels I'm looking for. I'm looking for my 786, my first point of entry. Then I'm looking at my 6.5 level, where I've put majority of it, right? You know, the next level that I want to scale in. And even if we go down to this level, this is as far as I will go and do it. And if it goes anything below that, for me, I'm not going to invest, right? Because that could easily mean that we have a trend reversal, right? We have the market now is going the other way. This is not a correction. Anything above 50%, right? So 0.5 or all of this. So 786 to 0.5. These are corrective levels, even in the Elliott wave, everywhere. These are corrective levels, so it's absolutely fine. So coming into this, you can see that these are exact points where you would want to be scaling in. 0876, 22%. You do a 35% scaling in, 38% scaling in, 50% scaling in. Anything less than that, anything more than that, or sorry, if it drops anything below, these are not good points. I would personally stay away from them. So yeah, I mean, remember, every time we're looking to go up, we're looking to go up to the actual Fibonacci 1618, and then we readjust. If we come down, then we're going to come down in stages of 22, 38, and 50% maximum. If we go anything below the 50%, everything is invalidated. So you can use this for any chart. It doesn't matter, stocks, cryptocurrency, anything. You can use these levels. This is actually my secret to success, for knowing exactly when to buy, for knowing when to scale into the model. So I've just literally given you the secret. People will charge you money for this, but I hope this kind of helps everybody. Now, going into the overall Bitcoin news I was talking about, I want to talk about the supply squeeze happening right now in Bitcoin, right? So we're talking about the liquid and illiquid, and you can go to Glassnode Insights to see this, right? And this was done by what was his name? Yesterday he was on the thing. What was his name? Let me just check. Yeah, Raphael, right? He's a very good guy. He does it. So he done this particular chart and put it on the inside. So it's really, really good stuff to see. What you have to understand, total supply of Bitcoin, right? So on the coin market cap, the total supply of Bitcoin currently, circulating supply, 18.6, right? So we have 18.6 million Bitcoin. However, we know about 5 million of that, or 4.5, 5 million of that is vanished. It's gone, right? We don't have that. So the illiquid supply is 14.5 million. So if you look at that and you say, okay, this supply isn't coming anywhere, we're looking at all of this. So out of the 18, we've taken 14.5 out. They're not moving. Then we have liquid supply, which is 1.2 million, means these are the ones coming in and out, or like always ready to go. These are more what's in the exchange. And then highly liquid, right? There's 3 million Bitcoin being traded by people. This is what's going on. So if you look at the total thing, what it's pointing out is 78% of the circulating Bitcoin supply is considered illiquid. People are hodling. People are saving their Bitcoin. They're holding it. They're moving it off the exchanges. They have invested in their future. Everybody's investing in their future, right? So that's what you have to understand. And if you look at this, 22% is only available to buy. When you got people like Michael Saylor buying 96,000, 97,000 coins, right? When these guys are buying thousands at a go, right? Elon Musk buys God knows how many. Do you think that this supply will sustain itself? I don't think so. So these are the kind of stuff you have to understand. So for anybody who's, you know, in the actual Bitcoin, you know, like for me, I always say I'm not selling. Michael Saylor says I'm not selling for another 100 years. I've only said I'm not selling for another 9 years. Like, so I said 2030. So a lot of people, there's a big fundamental. People always get like really hyped up or get panicked, right? Whenever Bitcoin goes up and down a little bit, or when Bitcoin's going up, everyone's all hyped up. They're all ready to take their profits. Majority of the Bitcoin investors are not in it for the money today, because Bitcoin is a hedge against the inflation. We know over time more and more money is going to be printed, so we are saving our assets in Bitcoin basically and growing with it. So that's just something I wanted to quickly give you. But as I said, you can have a quick look at the Glassnose Insights to see this, and Raphael does a fantastic job. So have a look at that. Very good metrics. Other than that, I don't want to make this too long. So I'm hoping that you understood how I use the Fibonacci and why the 786 is a significant number for me, and the 1618. And remember, as I said, 1618 is exactly the same as 0618. The levels are exactly the same. It's just a matter of positive and a negative, and you can use it as a retracement and as an extension. So just by putting the chart, right, you can put it on many things, but if you do it the way I just did it, you can actually use this to calculate the mean from the median, so the center, all the way up to here and all the way up to there. It's the same level. You can calculate up and down at the same time. You know, it's just so much more easier just to do it this way. So remember this, guys, the golden pocket is like the perfect entry, right? And then so anything below that, you're going to start, you know, you either go in, if you're a bull like me, you go in, or if not, if it goes anything below that, you stay away, right? So that's the whole thing. I hope this helps. I'm not going to make it any longer. Hope this was educational. If you liked it, please subscribe, like, share, and I'll see you on another one. Thank you very much. Bye-bye.